Investors react to the European Central Bank's decision on interest rates. AIG, General Motors, and Kellogg's are among the companies reporting earnings today. And more economic clues come with Friday's jobs report. I'm Brittany Umar, and the morning call starts right now.
Good morning. My name is Scott Redler, Chief Strategic Officer of T3Live.com.
And I'm Brittany Umar, and together we bring you Morning Call. Futures are higher this morning after the ECB cut rates by 0.25%. And we know yesterday we obviously finished lower. So now the question is if we'll shake that off today, if that was just a pause before we continue going higher.
I think there was some concerns coming in today about the ECB and will he be stubborn and not do it because it's been 10 months since they cut. So they did cut rates, and I think psychologically that's what the market wanted to see. You know, we walked in today, futures are up 2 to 4 handles, and now I think they're up 5 to 7 handles. So overall, yesterday we did have weakness with the Fed, but the Fed kept everything in line. They're still doing a pace of purchase, which we talked about yesterday, of $85 billion. They still are staying the course. Their mandate still hasn't been fulfilled. So it seems like we're back to the same type of market we've had, for the past few months with, a few faulty signals.
Speaking of those faulty signals, they could be lower highs out of the Russell and the transport, signs that we've talked about in the past as potential clues to a correction. So could this potentially be signs of a sell in May, go away type of situation?
Well, you have two cliches coming along. I think sell in May and go away is something that the bears have been talking about since January because they have not wanted to be in the rally. So now that we're here in May and we had our first down day, everyone's saying, oh, is it sell in May and go away? Or what traders saying is rotate in May, like we've been rotating all year, and stay and play. So I think at this point, there's been some strong stocks to gravitate towards, and that's been changing every few weeks, and then there's been some weaker ones to short. And like you said, we've seen some faulty signals out of the Russell, out of the transports, even the financials as they did not make new highs with the overall S&P, but they haven't also fallen apart. So I think at this point, it's just, take it in stride, do a little bit less, but stay with the move until it, drastically changes.
Well, we're going to talk about a lot of stocks that are poised to go higher and stocks that are looking weak. But before we do, why don't we take a look at the chart of the S&P and tell us the levels you're watching?
I almost forgot that. Thanks for bringing that up. Here we go.
Welcome. Let's
go to the S&P. Here is a macro trend that started back in November. Still intact. If you're a swing trader, you haven't even lost a wink of sleep with this trend in place. Then you had this intermediate trend that we tested here during the Italian election pullback. Then into this, when we had that breakout above 1560, and we came in real quickly, we broke it, but it was only for a few sessions before reclaiming it, which gave you some time to get back into some longs. And then here we are in this upper level. So yes, we didn't bust right through 1597, but we also were coming straight off the 50-day. So at this point, if we stay up here and go sideways, I think it could be long versus this 1577. So the longer we stay above here and these charts continue to build, the higher the platform that potentially we could take this out. So here's your inside box here. If you're an active trader, this is the range to navigate. If you're a macro or more of a longer term guy, I think you do enjoy the summer and you don't need to sell in May, but don't pay too much attention.
Well, let's dive into some of those stocks that have good-looking charts that are poised to go higher. A little over a week ago, we highlighted Microsoft as one of them. Is this still a play that you would recommend, though, for longer-term investors?
I wouldn't be jumping in here because it's just had a really big move. We talked about it before that Goldman sell, which I'd love to see what they did when they put the sell target on it. But anyway, it's been moving very well since earnings. You look at the chart here. This was your gap up after earnings. Okay, this is when it took out that high there, which was before the Goldman sell. Here was your nice little mini flag, and then it's still moving well above the 8 and 21. I showed you guys this monthly longer term channel here, and this was a nice wide range bar. We just took out this pivot. I do think that this stock could hit as high as 37.50 at some point this, I would say at some point this year. But granted, buying Microsoft into excessive strength has not been working over the course of the past decade. So just if you're in it, stay in it. If you're looking for an entry, I do think let the 8-day catch up, which would be right around here, and then so maybe be a buyer closer to 32, and then if it continues, it should go above this 33.11.
Another good-looking chart, Intel. In Monday's newsletter, they called the buy price 23.87, and Intel is now triggered above that.
Yes, and really the core buy was above 22, which is also when we were talking about Microsoft, we used it in the same thesis that these mega caps that are highly liquid, they have big time name recognition, they have yield. It's almost like putting your money in a savings checking account because you're getting more interest by sitting in Microsoft and Intel, but you could also get some price appreciation. If you look here, this was the trade above this level, this 22 area, and then it consolidated, let the 8-day catch up, and now it's still on the move. If you want to take a little bit longer term look at it, the semis have been stronger as of late, and I don't see any reason why this can't at least get to as high as 25 before getting a real pause, and then at some point maybe even as high as 27 this year. So this would be my target zone for the year. This was your core buy, and now just trim and trail it and be a little bit more active.
All right, and YHOO broke out to a new high on April 25th, pulling back a bit now, but being as we've seen YHOO bounce on pullbacks in the past, should we buy if and when it touches that 21-day?
Well, I think 4 times it's touched it and it's been viable. The real core was obviously last year when it broke above 1660. You look at that right here, another channel. I talk about channels all the time. So you go to this channel that was intact, you go to the weekly and you'll see it very clearly. Here it is. These mega cap names, or this is what I wouldn't even say is a mega cap name, but this was a prior leader, that trade in this longer term channel that shows you accumulation. Here was that inside channel. So when it cleared 1660, this was buy area number 1, buy area number 2. And if you miss both those buy areas, you have to find the right proper entry, and that's been at the 21-day. Here, touched the 21-day was buyable, had a move. Touched the 21-day was buyable, had a move. Did it again here. Here it touched it and went. This one went a little bit below it and then made a new high. So, coming back into the 21-day, why not do it again? So right around 24 after a move back, from 25.14. If you sold it on this reversal here, because look at this outside day, made a new high, closed weak. Same thing that happened here. I would be a buyer around 24-ish.
Okay, and also last week we mentioned Lionsgate as a breakout candidate above 24. Got that move. Now it's been digesting. Could we potentially see another move higher?
Yes, this is one of those base on base add-on type trades. And if you look at the chart here, something for for everyone, so to speak. This was your last breakout when it went above this 24.19, flagging above it. Just let the 8-day catch up above this 25.35. You could see another cash flow trade. Just don't get too big there.
Also, we mentioned CBS recently as a breakout candidate above 47, where it got last night in after-hours trading. So what's the key level it needs to hold to keep up momentum?
See, this one has been basing longer, so maybe it could have a meteor type move higher. So if you look here, CBS, a name that we don't talk about that much, but these media stocks have been doing very well. Here's your last upper type flag. So I would say above this level right here would be that breakout level. So if we can get above 47.13-ish, that's your level for a 52-week high breakout. So watch that level. It's been consolidating now for almost 3 months.
Now, how about Disney? Keeps rising higher above key moving averages, looking really good. Where might we be able to nibble?
This one, I think, you've been Mickey Moused out if you don't have it. So here, it's been a great trade. I messed this one up way back when. I think I was trying to buy it in here or into this, last consolidation. Now it just keeps going. If you're in it, stay in it. If you're an investor, congratulations. You picked a nice winner. Look at the size of this move. It just keeps going and keeps going. It's above the 8-day, so I wouldn't be entering up here. I would wait for a pullback or just or avoid it because you just missed out on a heck of a move. Yeah,
I was just going to say how significant of a pullback. It would have to be pretty significant, right?
Yeah, to be meaningful at this point. Right. Just realize or look at the pattern and say next time I see a pattern like this, especially in a big cap name like Disney, pay attention and don't just think that you can't make money in the market because of things that happened to you in the past.
All right, well, we're going to go on the flip side right after this commercial break and take a look at stocks that are showing weakness. We'll be right back.
I'm Evan Lazarus, Chief Knowledge Officer for T3Live.com. You don't become a great trader by watching videos and taking courses. You become a great trader through live screen time. Accelerate that learning curve by tapping into the experience of seasoned professionals. Currently, we're offering 5-day free trials to each of our 4 mentoring rooms. In the mentoring rooms, we teach our strategies in the context of the live market. To sign up for a free trial, go to the T3 Live education page, fill out the form, and get started when the next trading session begins. We hope to see you in one of our mentoring rooms.
We're back and going in the trenches with stocks that are showing weakness, and we're clearly continuing to see weakness out of Amazon. We highlighted yesterday in yesterday's morning calls a short candidate if it couldn't get back above the 200-day, which it has clearly not been able to do. So how much room to the downside does it still have?
Well, the longer it stays below the 200-day, the longer it'll give the shorts confidence that this time it's going to really take a bigger move lower. You know, my rule with the 200-day is hopefully, you know, obviously this had earnings, so it was hard to do. You know, you have high-level stops at the 21-day or the 50-day, so by the time it gets to the 200-day, maybe it's a buyable opportunity. So the question is, when it breaks the 200-day, late sellers typically, you know, get scared out. But you know, if it does then not become a seller's trap, meaning like that, you know, that was a spot to steal your stock, that means it doesn't reclaim it. So, in other words, the longer it stays below the 200-day, the higher the conviction rate that there are real sellers in here, and you've seen a real change. So that level right now is 251. You look at the chart here. If it stays below this 251, or maybe even give it a little bit more room below this channel support, which will now be big resistance, you know, the higher the probability you see at least a move to this 240 and maybe even down to 220. Overall, big wide range bar after earnings. First time in a while they did not give this stock a pass for not having exceptional earnings. Now the longer it hovers below this area, the more the shorts could sink their teeth in, or people will get out of their longs, because if you look at this chart overall, you know, it's been a heck of a run. And it's just breaking below on the monthly. It's 8 days, so why not see a move to the 21-day, which is 231, and then, you know, reevaluate, and here's that 220 right there.
Also, Procter & Gamble is still getting punished after missing its earnings report. Where is the key level of support? This
one, you know, for a while, these type of stocks were holding up the S&P, and then some of them did crack. This one cracked a little bit. You look at the chart here, you will see that, you know, here was, you know, closing the dead high, so no one was expecting this type of move lower, because it wouldn't have been, you know, so lofty going into it, and then boom. This wide range bar with the gap engulfed this entire area and trapped all these buyers. So, you know, tried to bounce a little bit. This is your lower range. You know, sometimes these things just get a pass here, so I wouldn't just be, you know, blindly shorting. Above 78, who knows? Maybe even it gets a reflex bounce. But the longer it stays in this lower third of this overall bear type flag, the higher the probability that it breaks below this 676-ish area, or 7660, for a move down to, you know, perhaps even the 200-day. So, you know, I think money has gravitated to these. This was a bit of a surprise, so it's trying to hold this support. Watch the support. If it gives way, that should be your stop or a short entry.
Well, not too surprising that BIDU is on this list. It's back below all key moving averages, keeps getting pressured from them, and Scott, I know you're not a fan of this guy, so
This one is just, you know, it was one of the darlings of the high beta world, and then it just became a choppy, lethargic, beaten down mess. You know, with headlines and rumors and this and that, whatever it is, all over the course, like a lot of these Chinese stocks have had. So anyway, you look at the chart here. I haven't traded this one in a while. This too just trapped a lot of individuals. It looked as if it was ready to break out. Look at this wide range bar above this resistance, and then boom. You know, earnings were not what you know the street was looking for. It gapped down, and then it's still in this lower range. It's going to be hard, I think, for this to break below this long-term area, considering where it came from. But I would just, if you are long it, you better use this 83 area as a stop. And if you're looking for some type of short, if the market got a lot weaker, you know, you go almost to your monthly chart, and you will see that this area right here is huge. Because if it were to break this area, you know, then you're talking maybe mid-60s.
All right, well, what if you're looking for some kind of short with VMware, because that pattern's getting pretty tight?
Well, VMware also, before we go to the daily, like this too, you know, you had a huge hole in the chart from like 2 quarters ago, and then it worked lower, and then finally started to break into the gap, and then disappointed again. You know, you look here at this chart, and you know, it's been so choppy and so it's just been a mess, you know, ever since it put its high in back here. From then, you had a sharp move lower, you know, a bounce back retest. You look right there, and then went lower again. Then what did it do? It retested again. Then it had a huge gap lower. Remember this little area we talked about? If it breaks below this pivot, you can get downside. You got small downside. Then, you know, it ignited into the gap. Sorry, hold on a second. It ignited into the gap and filled a portion of it, and then from there, it's been working its way lower again, and now it's right back to to macro support. So this has been something that has been, you sell rallies, you sell breakdowns, and now at this particular point, if it were to break below 70, there's really nothing below it. If you have to almost go to the weekly chart, and you'll see below this area, it's now below the 200-day for a considerable amount of time. You could see it move down to 60, maybe even below that. But I'm not really good at shorting things or pressing. All these stocks I just named already had big moves to the downside, but the same way as a momentum trader that I am to the upside, there are momentum traders to the downside, and the stocks that we just showed, if any stocks are going to have downside follow through, those are the ones that look a bit more broken than some of the stronger ones.
So those are the ones they should keep on their radar. All right, well, put your quick hit hat on because we're going to run through some names here. Apple obviously acting better since earnings is in play. Now that it's held the 50-day, do you think the stock has changed its composure?
A lot of volume came in after earnings, could be because of their big, ginormous buyback. But anyway, potent move through 420, paused in front of 445. The longer it stays above 435, the 50-day moving average, the higher the probability we see about 470. So right now, I did come in flat today, took my trade the day before. You look real quickly at the chart. The longer it stays above this 50-day moving average right here, the higher the probability after a brief pause, we could take out 445, and then your next level fills this gap up to 465, and then you have 469.
All right, and Facebook reported first quarter earnings yesterday. Seems like the street thought it was pretty good, did report progress in mobile, higher profit, but did not give a forecast. What do you think of the report?
I thought it was okay. The street and the headlines are all focusing on their revenue growth in mobile, which is what the street wanted. It's now the third quarter that it's had some revenue growth there. Overall, do I think it's enough to get traders overly excited? You look at the chart here, I think short term, it's got to get above this 28. If it can get above 28 on a 30 to 60 minute basis after the open, perhaps shorts get squeezed, we see some more follow through, and we can get a move up to 29.5 or 30. Overall, this cup and handle macro pattern is still building. The question is, was this quarter enough to get it in motion, to get it back to 30, 32? Closing above 28 would be a start.
And Las Vegas Sands reporting strong first quarter earnings, largely on growth in Macau, where we know that's where the action is. How do we play this one at this point?
This one's been moving to the upside, acting better. The whole group's been acting better. There is a pivot at 57. It's above it right now. If the sellers can't take it back below 57 right here, I do think traders will try and stay with it, and you could have some kind of clean breakout above this level. Here is your pivot right there around 57. All
right, and let's talk to the gold bugs. GLD seems to be making a pretty nice recovery.
Yeah, if you can call it that. I think it's been a choppy, hard to trust, backwards recovery off that low. It broke the macro support, and then ever since then, every day it's almost had an opposite of how it closed. So here you are, you look at gold. I know guys on my desk or ladies on my desk have been trying to trade it, and it's been very hard to deal with. Here was your low. It came back up, filled this gap. Okay, which was a decent retracement from where it broke macro support. At this point, it turned tail there, and then yesterday you had a gap down with no downside follow through. Here's your mini box. It's opening up a little bit. At this point, all you know is you have support at 139.30, and then you have resistance 143.30. I think it's a very noisy inner range. Ultimately, I think this is broken, and the head's lower. It's just absorbing this huge move that took only 2 days to happen. When it broke this macro support, look how quickly it came down to this lower level. So it's retraced about half of it. So it's really just very noisy. Overall, though, this was in the intermediate range broke, your macro range broke, and now you're back into like a little bit of a micro intermediate range here. So trade it accordingly.
And just checking in on drug stocks, what did you make of the action yesterday in the group? Because we did have mixed action with Allergan falling more than 9% and Regeneron climbing 14%.
Well, REGN has been off the charts a few times. It's been a strong stock, and I think some people got lucky because there was a nice bullish pattern there. No one knew that the news was going to come out negative on the other side of that company. So if you had a buy stop in here, you really got paid. It's never happened to me like this. But anyway, look at this pattern, really nice, consolidating up here. We've talked about this many times. Your buy price, not knowing that some kind of news was going to come out, it was around 220, 225, and boom, went as high as 252. So if you were, taking a little bathroom break or went out for lunch or went doing something and you had a buy stop in here at 220 or 225, you came back and you're like, wow, I just put on the right trade. I had no idea what was going to happen, and you did well. at this point, it's been a heck of a move. So I would just be a little bit careful. Sell side thinks it can go higher. To me, I think, you should have hopefully sold some into there, and maybe you trail a little bit. Your next pivot here is 252.
Well, ECB is out of the way. Now we look to jobs report tomorrow. What will you be focusing on today?
I'm just going to be taking trades. You had a weekday yesterday. Now we're already bounced back a third. Maybe we take back a half, but then you have to realize, what are you going to do tomorrow into the jobs number? The companies are doing big buybacks. They're doing dividend hikes, but they're not really hiring. But I have read that, with the birth death model that they do have in place, that sometimes in May, they have all these phantom jobs that they think were put in place, so the number could be a little bit better than was thought. So it's tricky to be just short into the number, the same way with some of these faulty signals that we talked about. It's tricky to be excessive long. So at this point, know your time frame, know your risk. I'm probably going to be pretty light, and I'm just going to tactically trade some of the strong stocks, and and maybe even short some of the weaker stocks, and see what happens as we go into the weekend. All
right, that's your morning call for this Thursday. Happy trading, everyone. Have a great day.
I'm Mark Sperling, Director of Trading with T3 Trading Group and contributor to T3 Live. Do you trade on your own, but you wish you enjoyed the benefits of a large trading floor? With the T3 Live virtual trading floor, we deliver that experience to you on your computer. On the VTF, you can follow the long and short positions of experienced professional traders like myself, Scott Redler, and others, and listen to our live radio stations as we navigate the markets. In addition, you get the added value of a large community of sophisticated and like-minded traders. Your membership to the virtual trading floor also includes access to our two very popular newsletter products, Off the Charts and the Price Point Sheet, at no additional cost. In my opinion, joining the room will be the best trading decision you will ever make. I would like to invite you to begin your membership with a 7-day free trial. To get started, visit t3live.com and click on the Virtual Trading Floor tab. Have a great day, and I look forward to seeing you in the VTF.